Welcome back. You're watching Market Fatafat on ET now. And now let's move on to the next stock for today. We have L&T Finance that's in focus. Q4 profits, that's something that missed the estimates of the company. Other than that, we saw that that was mainly due to the additional provisioning that the company has made. But big miss that came in from the PAT and overall the calculated NII that was at around a 12% uptick. PPOP was around 63% uptick there. And other than that, let's just see what else was happening in terms of their net assets also, and what we're seeing as well as in terms of retail disbursements, that saw a growth of around 33%, while in terms of the retail book, that saw a growth of around 31%. So yes, L&T Finance is something that we are keeping an eye out on today on the back of its Q4 numbers. We're seeing the stock is buzzing away in trade as of now, and we also did have some more details that came in terms of the NIMs of the company, 9.14% versus 8.97%. So yes, we're keeping an eye out on their FY24. That was the highest ever annual PAT as well. So yes, on the back of that, we're keeping L&T Finance in focus.
All right, let's move on then, and let's bring on board Sameet Chavan joining us on the show right now. Very good afternoon to you, Sameet. And the first stock that you're going to talk about is HPCL. How is this one actually looking on the charts to you, given the fact that yes, the crude price movement and the volatility there did impact the stock prices of late?
Good afternoon. Yes, if you see it's price-wise movement, stock corrected sharply from recent highs, then consolidated around its important moving average of 18 and expansion moving average, and slowly, gradually now it is resuming its high degree uptrend. If we see today's price action, stock has managed to surpass its last 4 to 5 days high, which was around 498 500. And if you look at the volume activity, it has risen substantially, so that provides some sort of credence to this move. So we expect continuation of the up move, and stock seems to have completed its price rise as well as time wise correction, and now it is going to head higher. So 520, 525, these are the next levels to watch out for. As far as HPCL is concerned, any dip, a minor dip would be a buying opportunity, and now the base which was around 460, 470 previously, it has now shifted higher towards 490.95.
All right, so that is all about HPCL that is in focus. And yes, given the fact that a lot of these companies, not only the crude related companies, but the ones that also use that as a raw material, also in focus.
Yes, absolutely. But let's move on, talk about Maruti Suzuki. This one also in focus on the back of its numbers, Ansh?
Yes, that's right. The stock is, they have given a revenue which is in line with the expectation, but the EBITDA and margin, they are below the expectation. Actually, the company has reported sales revenue volume which is up by over 13% on year-on-year basis. Also a revenue which has come in at around 38,235 crore, which is up by around 19%. PAT has jumped by 48% to 3,878 crore, whereas EBITDA, that is up by 40%. And if we talk about margin, there also we have seen good improvement from 10.4% to 12.2%, and this is on the back of improved capacity utilization, cost reduction efforts, softening of commodity prices, improved realization, higher non-operating income. We also have few brokerage note on Maruti, and this is from Jefferies. They have raised FY25-26 EPS by 3 to 4% and retained buy rating. Also, they have hiked their target price from 12,000 to 14,750. UBS has also come up with a brokerage note, and they have maintained a buy rating with a target price of 14,000 rupees.
So that is all about Maruti Suzuki, how the numbers were coming in, what the brokerages have to say about Maruti Suzuki. But Ankita, let's talk about Yes Bank, and yes, this one an earnings candidate, and you're seeing good reaction on Yes Bank in today's trading session.
Yes, Cheryl, Yes Bank is seeing a good reaction to the earnings. In fact, the stock was up 8% in the early trade today after it posted a strong set of Q4 results. The bank reported a net profit of 451 crore rupees for Jan to March quarter of the financial year 23-24, marking a 123% jump compared to 202 crores in the year ago period. Now, the bank's gross NPA stood at 1.7%, which is down from 2.2% recorded in the same quarter last year. On the other hand, the NPA for the quarter also stood at 0.6%, improving from the 0.8% on a year-on-year basis. Now, in the fourth quarter, it started functioning as the PSP payment bank for the existing and the new customers for Paytm Bank. However, for Paytm, I beg your pardon, and also Kotak Securities, that says that it is maintaining its sell with a target price of 19 rupees per share. Why? Because they feel that the one-offs dominate the earnings and the recovery is slow nonetheless. Also, the most of the one-offs were used to strengthen the balance sheet metrics, and the business is steadily recovering, and the one-offs will continue given the incident, and the current price factors in most of the positive outcomes for the company, and for that Kotak Securities is maintaining a sell. However, the markets are positive, and the stock is up and away 4.7% in trade today.
Okay, surely keeping an eye out on that one in trade today. But let's move on and talk about BPCL. Sameet, HPCL, now BPCL. What's the view on BPCL? Similar to that of HPCL?
Yes, chart structure is quite similar. As far as the BPCL is concerned, it's been consolidating since last month and a half. 615 was acting as a steep resistance for this pedal counter. Today, it has managed to surpass this particular hurdle convincingly. And if we look at it on the hourly chart, it has clearly given a decisive breakout. So from here on, 630 to 638, these are the next levels to watch out for BPCL. And on the lower side, if you see, there's a strong support around 600 and 605. So minor dip would be a good buying opportunity. 635, 638, these are the next levels to watch.
Okay, surely keeping an eye out on that one. But let's move on and pull up Cummins India. This one is in focus today. Why? Because we have a brokerage note that's come from Kotak Securities. They have actually, when you're looking at it, what we're seeing is they have given a buy rating. They've hiked they've downgraded the stock to add from a buy, but they've hiked the target price to 3,450 rupees from previous target price of 2,750 rupees. So yes, a sharp increase in terms of the target price is what they've given. They said that this stands out in terms of the consistency as well as healthy growth, large breadth of the business with growth prospect exceeding 2 times, and GDP growth is 2 times the GDP growth. So yes, that's where they see a good performance. Other than that, strong case for margin being resilient at the current high levels for a longer period of time. Though yes, they believe that because of that uptick that we've seen in terms of the stock in the recent times, they are just a bit cautious in terms of the ratings, but otherwise they've hiked the target price for the company. That's Cummins India for you all. As of now, holding on to gains of 2.6% at the day's highest point. Let's move on, and Sameet, talk about Engineers India Limited. Where do you see in terms of the stock price that one should expect in the short term as well as the long term? Because what we're seeing is an 87% return in the last 6 months, or 90% return in the last 6 months for Engineers India. Still an upside that one could see?
Yes, as you rightly pointed out on the broader TV chart, yes, the stock is in a strong uptrend. Recently, we saw some consolidation in this counter, and this is a robust sign as far as its higher degree uptrend is concerned. On Friday, we witnessed a decisive price and volume breakout from this counter. Price-wise, the configuration-wise, we can see a price pattern which resembles the inverse head and shoulder pattern, and this particular pattern has a bullish implication. If you look at the volume activity, it has risen substantially. So overall, the trade setup is quite promising for this particular counter, and we have a buy recommendation as a disclosure, and we have recommended this to our clients as well. One can buy at current level. 222 would be the stop loss level, and we would expect the stock heading towards 7 probably next 3 to 4 days.
Okay, surely keeping an eye out over there for Engineers India levels over there. But let's move on and talk about SBI Life. Ansh, why is this one in focus?
Right, so the stock is actually slightly in green. They have reported numbers only. Their PAT has gone up by around 4% from 777 crore to 811 crore, whereas the net premium has jumped by 26% to 25,116 crore. We have a brokerage note from Goldman Sachs, and they have maintained a buy rating, but they have trimmed the target price from 1700 to 1650, which is still around 15-16% away from current level. They've also said that the quarter 4 numbers were in line and steady performance to continue. We have one more report from Jefferies, and they have also maintained buy rating, hiking their target price from 1700 to 1740, which is around 22% away from current level. And they have said that the healthy growth in premium was led by improvement in ULIPs.
Surely keeping an eye on that. But with that, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after the break. Welcome back. You're watching Market Fatafat on ET now. Before we continue with the stocks, I just want to mark the markets right now. 22,617 is what the Nifty is trading at. So comfortably above the 22,600 levels. Up almost 0.9% in trade is what the Nifty is trading at. And, we should just take a quick look at what is actually, supporting the markets today, or what is pulling up the markets. ICICI Bank, clear winner coming in there. We spoke about it over there. Other than that, we have SBI, Axis Bank, HDFC Bank. So clearly the Nifty Bank is the top puller for the markets, and that's why all the Nifty 50 banks are doing quite well. All of them are pulling the markets, as well as, let's not forget, Reliance. The heavyweight Reliance also is supporting the markets. So yes, we've seen a sharp recovery in the markets. Nifty 50 also seeing a very strong recovery as of now as well, up almost 0.9% in trade days. Highest point 22,600 levels for the Nifty 50. But let's move on and keep going with the stocks then that are buzzing in trade. Craftsman Automation, Ankita. Why is this one in focus? Is its earnings and because down and out in trade?
Well, yes, absolutely. Craftsman Automation is absolutely down and out of trade, trading with cuts of more than 5% right now, and it is on the back of its earnings. Let's look at the earning then first. On a consolidated year-on-year basis, the revenue is, we're seeing an uptick of 12% on a year-on-year basis. The EBITDA is also up 9.6%, but the net profit has taken a beating and it is down 12%, in this quarter gone by, and the EBITDA margins have also taken a beating and is down. It came in at 18.7% versus 19%, down 55 basis points. And the board has also recommended a final dividend of 11.25 rupees per equity share. But Craftsman Auto is down and out, reeling under, selling pressure since morning. It has sustained that, and it's trading with cuts of more than 5%.
Okay, that's the update on Craftsman Automation. Let's move on, talk about DLF, the real estate pack overall, Sameet. That's surely seeing that buzz, in the last 1 year. When you just look at DLF also, from 400 levels today at 882, nearing that 900 mark. What's the view now on DLF? Should one actually start booking profits?
See, I think more than booking profit, it seems that the stock has slipped into a long consolidation phase. If you see since the early part of March, the stock has done nothing. It has been gyrating in a slightly broader range. If you see, it's 800, 820 on the lower side has become a very strong support, and whenever this stock reaches its higher boundary, which is around 930, 950 kind of zone, some sort of profit booking tends to happen. So this is clearly the pattern that has emerged for DLF. So at least in the short term, we don't expect this stock to give the similar kind of move that we have been witnessing 6 months back or 3 months back. So we would expect some consolidation. So at higher levels, it is likely to see some sort of selling pressure. So as a momentum trader, one should book as close as possible to the resistance level, that is 900, 950. And try to accumulate whenever the stock reaches its important support of, say, 800, 820.
Okay, surely keeping an eye out on that. Let's move on, talk about Indus Towers. That one is in focus after Kotak Securities has downgraded Indus Towers to reduce from a previous ad rating. They've hiked the target price though to 340 rupees from previous target of 245. They said we've already seen a good run up, and why is that? So when you look at the stock price, just see the last 6 months. When you look at it, 106% uptick. So from around those 160 levels we're seeing today, the stock is trading at 350. So maybe it's time for a breather, is what Kotak Securities is highlighting. They're saying the medium-term outlook has improved for Vodafone, improved as Vodafone Idea's fundraisers there. We've spoken about that last week when it happened, and overall they believe there is a lot of network investment, so long-term outlook still is dependent on Vodafone Idea's long-term revival, but they believe that the benefits are adequately priced in as of now in the post the recent run-up that we've seen. So that is why a bit of a subduedness they believe that is one could see for Indus Towers, and that is why the stock is a bit sluggish in trade, down 0.7% in trade. Let's move on to the next stock, and stock number 28. We're going to talk about Utkarsh Small Finance Bank. Ansh, this one also an earnings candidate.
Yes, so actually they have reported net interest income which is up by 12% from 482 crore to 540 crore. Also their PAT has gone up by around 19-20% from 134 crore to 160 crore. GNP has seen some improvement from 3% to 2.1%. Even NNPA has come almost to 0.03% from 0.19% on quarter-on-quarter basis. They have reported NP of 418 crore, which is also down from 464 crore. Again, a good thing. Even NNPA has come down from 28.9 crore directly to 4.5 crore, which is down by over 84%. PPOP has been recorded, which is up by around 10% on quarter-on-quarter basis and 36% on year-on-year basis. Provisions have been reported at 74 crore, which is down from 104 crore on quarter-on-quarter basis. So this is the reason why the stock is in focus today.
Let's move on to the next one, and IndusInd Bank, Sameet, that's the one you're keeping on your radar as well. So what is it that in terms of overall that we could expect in terms of an up move from the stock price? IndusInd Bank in the last 6 months has not done pretty much anything interesting. So now do you think it's time for IndusInd Bank to see that up move? And today the stock is trading with almost 2% uptick. What do you think that we would be seeing for IndusInd Bank?
See, barring today's 2% move, the stock has done nothing. In fact, if you see in last 2 odd months, Bank Nifty has given stellar move. As we speak, it is trading at all-time highs. This stock has not participated along with the Kotak Bank. So it's been the PSU banks that have been leading the rally along with some of the private banking giants like ICICI Bank, Axis Bank. But IndusInd Bank has been the laggard, and we don't see any encouraging sign as such. With a short-term view, there's a sacrosanct support, and it's a make or break support as well, which is based on 1450. So till the time the stock holds this important support, there's some hope of recovery in this counter. But once it slides below 1450, then we could see much lower levels probably in the near term. So as of now, on the higher side, 1520 should be seen as immediate level. If it manages to surpass this, we could see some early signs of revival in this count.
Surely keeping an eye out on that. Let's move on. And Sangi Industries, Ankita, that's the stock you picked out for us on the back of earnings. What's the stock doing?
Sangi Brothers is up and away at 2% in trade today. Let's look at the numbers then on a consolidated year-on-year basis. The revenue has come in at 285 crores versus 225 crores. It is seeing an uptick of 26.7% on a year-on-year basis. The interesting thing to note is that they have also narrowed their losses, to 19 crores from 104 crores, on a year-on-year basis. So that's a major gain coming in for Sangi Brothers. And remember, a few 6 days back also, the stock was up and away because the fundraising plans have also been approved. They will be raising funds worth 2,000 crore or 2,000 odd crore rupees. And on the back of the results, Sangi is also firing away in trade. It is trading with gains of 2%.
Let's move on to the next stock that we're going to talk about is IDFC First Bank. IDFC First Bank, we've seen a fall coming in the stock price today, and this is after the Q4 numbers. The profits of the company have fallen, and that's a bit of a subduedness we're seeing there. Other than that, the net provisions also for bad loans were up by 50% YOY. But we managed to speak to the management. What did they have to say in terms of the asset quality? Listen in.
Our guidance to the street has always been gross NPA of 2%, but our reality is our gross NPA of X infrastructure running at 1.55. We always talk, in fact, retail NPA is 1.38 against guidance of 2. Net NPA we guide for 1. We are running 0.4, 0.5. So now looking ahead, I can assure all of you we will be super cautious, and we don't expect to anywhere even get close to a guidance.
surely keeping an eye out overall for IDFC First Bank today, clearly under pressure, down 4 to 5%. Let's move on, talk about MCX then. That one is in focus today. Why? They also have received a SEBI letter asking for the differential fee amounting to rupees 1.8 crores. This is including interest for FY18 to FY23. MCX has been following industry practices and paying SEBI regulator fee on an aggregate value of the transaction, that's on the premium turnover value in case of option contracts since their introduction in FY18. So yes, this is something similar that has the letter that has been given to BSE as well. That is why we saw that the stock was clearly under pressure in the morning, recovered from the day's low, though as of now also down almost 1% in trade. Let's move on to the next one, and Ankita, we have SBI Cards that's in focus. Why is that so?
Well, yes, SBI Cards is in focus today. In fact, the shares of SBI Card, fell the most in the 3 months despite a profit beat as the credit costs have inched higher. The credit card company's margins were also under pressure, declining 39%, 39 basis points from the last quarter. The share fell almost 4% in early trade today, and they're still reeling under pressure is what we can see. A couple of brokerage notes also that came out. Elara Capital came out with a note. They see that as challenges refuse to abate, both business and asset quality may remain sustained in the next 12 to 18 months, proving a drag on the earnings. Company is also, maintaining a cautionary stance on a new business acquisition with risk management taking precedence and should take place in its, hibernation mode. And they're maintaining a sell on this counter with a target price of 719 rupees per share. Jefferies also feels, is also maintaining a hold on that counter, and they've cut the target price to 785 rupees from 830 rupees on the back of the result. And on the back of that, we can see the impact coming on the stock. It is down and out right now more than 3.5% in trade.
Absolutely, surely keeping an eye out on SBI Cards. But Ansh, we have Mahindra Life's life space developers also that's in focus. And, this is also on the back of numbers, because look at the pressure that we're seeing there, right?
That's right. They have actually reported a profit of 715 million, which is up by around 13,390%. Also, the revenue is up by 94%. Actually, if you see the chart, the stock is actually showing some selling, and it has been declining from last 3 consecutive sessions.
Yes, absolutely. That's why we're keeping an eye out on Mahindra Life Spaces as well. But with that, we're absolutely out of time on this edition of Market Fatafat. So thank you so much, Sameet, Dwani, as well as Ansh and Ankita for joining in with us and, talking to us about all the stocks that are buzzing in trade. But with that, it's a goodbye from myself, Cheryl, as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.